Hi, Adam Watson here from the JMRD Watson Wealth Management Team's Chatham office. I'm filming this video on September 15th, 2022. I was hoping I wouldn't have to be the star of another video for a couple months. However, I wanted to comment on what's been happening this week in the markets and the economy. Before diving in, though, Howard Marks, one of the most well-versed and prolific financial writers in the world, came out with another one of his memos recently this month. The main theme being that the success rate of economic forecasting and predicting the future in the markets is very low, and that was proven true this week when the latest inflation numbers were released out of the U.S., which begs the question: what happened? Inflation numbers seem to have become more complex as everyone is focusing in on the fight from central banks around the world to tame inflation. And in the US, when you look year over year, meaning from that month in 2021 until the same month in 2022, we've seen the inflation rate drop from 9.1% in June, which was the high, to 8.3% in August. However, digging deeper into the numbers, when you look at the shorter term month over month data, inflation from June to July was unchanged and 0%. However, from July to August, it crept up 0.1%. However, most experts in the world expected that rate to decline. Once again, proving maybe it's a little hard to predict or forecast what's happening in the economy, as Howard Marks alluded to. Further muddling things in the inflation conversation is trying to explain core versus total inflation. So total inflation involves all the various components the governments count, including the more volatile parts like oil and food that can change very rapidly, while core is supposed to be the more standard, more stable items. In August, total inflation because of oil was a little more muted. However, core inflation increased more than the experts were expecting. So now that we've hit that point, it's all clear as mud, right, on the inflation side. Personally, I've always been a little bit skeptical about short-term fluctuations in any market and in expectations as well. Especially coming out of COVID, we've seen lots of unexpected results, and as people get more comfortable to go back to normal, it's created lots of pent-up demand. I'm chatting to lots of clients who are buying second properties, taking big trips, doing that thing they put off for the last 2 years when their world was put on hold. So I'm not surprised that short-term numbers are not necessarily behaving the way as expected. It's important to remember when talking about inflation, no government is trying to get to zero inflation or negative inflation. The U.S. Federal Reserve, which is the most commented entity, they want inflation in the 2% range year over year. So that's one thing to keep in mind, because there should be a little bit of inflation enter our lives each target, even if they're on target. And forecasting, that's not just an American problem or a Canadian problem either. After the US news yesterday, today the numbers on inflation came out in the UK. Experts were expecting inflation to increase again into a new all-time high level to 10.2%. But in another big surprise, inflation actually dropped in the last month to 9.9. So I've spoke a lot about inflation. So what happened to the markets? So yesterday was the worst day in markets in 2 years. The previous worst day before that took place in 2020 in the depths of the pandemic and lots of the unknowns. Year to date, we've now had 8 days where the markets have moved downwards by more than 3% on a single day. The only other years where that's happened, where we've had drawdowns of over 3%, were 2008, 2009, and 2020. So interestingly, the year immediately after these years, or even that year, were very good for markets. 29 was very good. 2020 good in the U.S. 2021 very good across the board. and so maybe less is more when it comes to forecasting, and ignoring the noise is the best course of action. I do think the hotter inflation in the U.S. does open the possibility for either larger or longer rate increases, either this month or over the next few, but only time will tell. And that's just my forecast, which I just explained is not a great, doesn't have a great track record. Given this is about 10 days since the last video I put out, I've not completed any new additional reading of books, but I'm open to any of your suggestions. So if there's something I should be reading, send me a note, drop me a line, and let us know. Once again, I'll ask that if there's any topics you want us to try to tackle in video format, let us know, and we'll see if we can put something together. And make sure you're following the team on LinkedIn, Twitter, Facebook, and YouTube for all our most up-to-date thinkings. Have a great rest of the week and a great weekend. Take care. Thanks. Bye.